Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar put in a brief challenge under the 66 handle. After staging a gap down opening to the start of the week, the market posted a fresh multi-year low of 65.80 before rebounding to a modest recovery, but still tackling the resistance and failing around 66.20. It is assessed beyond there and up towards 60.80 as a supply zone as this downtrend holds along with the ADX. The market is attempting to recover, but I feel that the threat is still towards the downside, with minor support seen at 65.80 and then the base at 65.55. But the recent break of 66.60 last week does suggest that we are now looking further to a potential fall to around 64 cents. The euro dollar stays an impressive rally overnight after starting the week on a slightly weaker tone, but the US dollar index, which measures the greenback strength against a basket of 6 major currencies, still running in a bit of trouble after its multi-year high, or peak that is, of 99.77, and now posts an intraday low of 99.01. This, on the flip side, saw the euro rally up towards 108.71 and it's currently taking a pause. From a technical point, there is no trend from the ADX. The RSI has broken over the midway point and the MACD is close to supporting a bullish signal. But be on your guard, because you can see here when we last time had this similar pattern here and the market failed to continue on. I believe that we could see a move to 108.70.80, but above there, resistance lies firm at 109.35.50 and a supply zone. And I do expect to see the bears defend this region and push the market back to the downside. If we see a break of 107.55, then this would expose the region down to 106.70 or maybe lower towards the 106 region. The dollar yen case is strengthened up by the Japanese yen demand on safe haven. After now there is a report of 79,339 cases of the COVID-19. From that, there has been reports of 2,619 deaths, with the actual outlook now breaking down after we saw this move here, because we've taken out the level of 111.35 overnight. This has exposed a region of 110.15 and reassessed from there. Any advances should find a cap around 111.35. The pound unchanged overnight and still locked in this triangle-shaped pattern, and still holding to a somewhat negative stance. I believe the market is going to break down and therefore look towards 128.45 and reassess from there. Any advances sees a cap around 129.55 to 130.25. Because of the oil breaking down, the dollar CAD found momentum overnight, but didn't quite get to or sustain at this point around the supply zone above 133. I do feel the market will struggle there and eventually turn back to the downside and look to the support seen at 132.50 and lower towards 131.85. Is this a shooting star? Well, if it is, we've got quite a bit of work to do to the downside, because where I've outlined here, this is where the break point to confirm, or the cutting of the support line to support this shooting star. And if so, then we could see from sub 1,630 for a move back to 1,600. But as I said, there is a lot of work to do, and we may only see a pullback to somewhere around 50 or down to 38.45. But nevertheless, we have seen a spike here, and from the resistance zone around 1,680.95 does warrant some pullback as we are overbought. Finishing up with the oil, we did break down at $51 a barrel, but closed above there. Let's see if the market can stage a recovery from here. If so, then I'm looking back towards the top side of the range around $54 a barrel. But a close under 51 would reinstate the downside to $49 a barrel. Well, that's a wrap for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to this new day.